So give me just a moment. I'm going to adjust the projector. That will give you a few moments to post any comments and questions, and we will get rolling. Okay, once again, good morning, good afternoon, good evening. Welcome to the September 29th, 2021 Swing Study Session. We have a smaller crowd than usual, which is fine. I love concentrating every once in a while with a small group. So, Tal, Sunny, Christopher, Betty, Audrey, once again, welcome. Here's what we will do. I already gave you a few minutes to post any comments, questions, or trades as I was tinkering with the projector. And I guess everybody is just exhausted. We had a really good session in Forex today, went over a bunch of open trades. Then I had the rare honor, maybe 4 or 5 times a year, of doing the open in the equities program, which is always an adventure. The equities program is just killing it this year. Whenever I do the open, it's always not just profitable. Whenever I've done the open, we have never had a losing day, and it has been not only profitable but massively profitable. So that's been a lot of fun, and now we had Oliver had a session with the pro and master traders, which actually was fun. Oliver. His tangents are just as fascinating as any subject matter he wants to go over. And here we are now. So maybe we're a small group because people are just exhausted from all the trading today between Forex, equities, and pro and master session with Oliver. So let's get right to it. We will do an overview of the general markets, and there's definitely been some change. And I hope some of you took advantage of this since the last time we were together. We pointed it out blatantly, and we'll take a look at it in the overall general market via the SPXL, which is just another ETF like the SPY, which tracks the S&P 500 in the general market. And we had our beautiful VSS catch play opportunity, which again, if you look in the upper left-hand corner of your screen, you'll see the daily chart and what I'm talking about, but we'll walk through it with each point and each step. And then we'll take a look at the QQQ, something somewhat analogous to the SPY. Now, always remember, the SPY, the SPXL, those are ETFs that track the S&P 500, which is the broadest base barometer of the U.S. equity markets that exist. It represents the top 500 publicly traded companies in the nation. It's rebalanced every year, so laggards are dropped and new superstars are put into it, and we go forward with it, and it becomes an overall barometer of the general market, really in perpetuity until the markets go away, in my opinion, or something more clever replaces it, which I think it'll be a very long time before that happens. Then I always drop back to the QQQ, where I also like using the TQQQ, T triple Q, or the T triple Q. And that is the broad market also, but with a focus on technology. a focus on the top 100 technology companies. Why do I usually start with those two? Why don't I start with the S&P 500 and the financial sector, or the S&P 500 and the energy sector? Because in my opinion, over time, the technology sector is really what drives the overall market. For the most part, every sector has its relevance. Years ago, maybe the 1990s, I would have said it's the financial sector, the early 1990s. It's the financial sector that's still driving, and technology is the up-and-comer. In the 1960s and 70s, or even into the 1980s, I might have said it's the industrial sector that's driving stuff, and the financial sector, will probably, is coming neck to neck with it. So, as things advance and we advance as a species, there's always a leader that evolves. And right now, it's definitely technology, and it's probably been that way for almost 30 years now. So let's start with that before I get into other individual trades that other traders have shared in the room. Let's get right to the general markets. I'll start with the daily and probably end with the daily with the general markets, unless any of you have a specific question on another time frame. Remember, I always, in the swing trading program, I always start with the daily, but that's not the only time frame you can swing trade. You can swing trade the hourly, the 30-minute, even down to the 15-minute. Really below that is really not for swing trading, right? What's the probability of holding a trade for 2 or 3 days on the 5-minute? It's possible, but extremely rare. So, and in Forex, remember, this program covers equities and Forex. In Forex, you could really swing trade almost every time frame. The monthly, the weekly, the daily, the 4-hour, the 1-hour, the 30-minute, and the 15-minute. All of those are viable to swing trade. So here we go. We every time we've had a market law 2 break, at least for the last year or two, a market law 2 break of the 20 moving average, it did not last long. So at each juncture in this program, we mentioned, okay, 20 moving average has been broken. Get on the sidelines for your longs. But if you decide to do something short, if price action gets back above the 20, be prepared. Be prepared, to get out of the short ideas and maybe back to long ideas. And that concept has worked wonderfully for almost 2 years now. Then, for the first time, we have a break of the 20, and we do not immediately, the first time in about 2 years, we have a break of the 20, and we do not immediately pop right back above the 20. Actually, we may be getting close to the confirmation of a downtrend for the first time in a very long time. We're not there yet, but we're getting very close, and I'll walk through the market law 4 aspect of that. So give me a moment. Let me get the magic marker here. And there are a bunch of people talking in the background. If any of that sound gets a little bit too much, let me know, and I'll have a chat with them. Just some people coming through for a little while here. So, but if the chatter is of a disturbance, let me know. So now, here's where we have the break, the obvious break of the 20 right here. This is one of, now, when I talk about the market law 2 breaks of support or resistance, I always describe it in 3 ways. So let me draw an uptrend here. So here's an uptrend. And then I say that there's 3 ways that you could have a break of a support or resistance item. So here I'm demonstrating the support of a rising 20 like we had on the S&P 500 on the SPYs. So this is a textbook classical way that it breaks. One bar closes below, another bar goes further. Then you have that occasion where you're dropping into it, you're piercing it, but that piercing bar becomes an elephant bar in essence, a very big bar where you know you need to count elephant bars as more than one bar. So at some point you have to be practical and call that a break. Then there's the third type where price action drops into the 20, pierces the 20, and then price action just sort of hangs out there for a little while and then eventually follows through. I go through the market law 2 break of the support or resistance and focus on the three types, if you want to call it that. And in my opinion, we had type number 3 here, right? We closed below, and then for a few days we just hung out there, and then boom, finally had that gap down and that follow through. So it's at this point where the uptrend is no longer dependable. Does that mean it's automatically a downtrend? No, there's that whole market law 4 transition it has to go through. Does it mean that you can't look for shorts? Sure, you can look for shorting opportunities. I would still have the same advice. If price action gets back above the 20, kill the short, because every time it did that, broke the 20 back above, wham, uptrend again. Broke the 20, got back above, wham, uptrend again. Broke the 20, got back above, wham, uptrend again. So on this one, here's what's different right now. It's the first time it's broken the 20. It looked like it was going to do the same old thing and get back above the 20 almost immediately within a few days, but no, it didn't. It actually formed the first lower high. Go back and look at this. It's been a very long time since the S&P 500 on the daily chart has gotten below the 20 and actually has formed a lower high. Now at this moment, it also looks like, well, I said lower high, but also lower low. They go in tandem. I should have actually said we formed our first lower low followed by our first lower high. So those are the first. Now let's take this in steps. What's step one, or I'll call it A? Well, you have a trend in a direction, in this case an uptrend, and the trend gets broken. Where did that happen? Right here. So A, the current trend is no longer dependable. Then B, how do you turn from an uptrend to a downtrend? Part B is you have to go through this phase of first forming the new lower low and the new lower high, which has happened, but that's still not enough to call this a transition from an uptrend to a downtrend. Does this look like it's the probability is gaining steam that it'll turn into a downtrend? Yes. Has it happened yet? No. Is it okay to take short ideas now that we're below the 20 and it seems to be forming a lower low and lower high and maybe forming a downtrend? Absolutely, if you're practicing proper risk management. But here's the final part, part C, that we need in order to confirm the change of trend. We need price action to get below here. Why? We need price action to take out the lower low. At that point, let's say today's bar turns into a red bar and does this. At that point, according to market law 2, you would have your confirmation that you took out the lower low. You would, in your market law 4 transition from an uptrend to a downtrend, you would have the market law 2 confirmation inside of that you formed a lower low, a lower high, and that was taken out. Now that's a lot of words to really prepare for the following. If it's going through all this movement, it breaks the upward 20, it forms a lower low, it pulls back, it forms a lower high, it takes out the lower low, guess what has time to start turning down and catching up? Our main barometer of trend. The 20 will start turning down and catching up, and that becomes our barometer of the downtrend, the 20. But it has to go through this whole transformational phase. It is not a light switch going from an uptrend to a downtrend, or a downtrend to an uptrend, or a sideways trend to a downtrend, or a sideways trend to an uptrend, or an uptrend to a sideways trend, or a downtrend to a sideways trend. Those are the only 6 possibilities you can have, are those transitions, but those transitions have to go through the market law 4 phases. What are those market law 4 phases again? Well, let's use this chart to walk through them again. Market law 4, the first part, I'll use Roman numerals this time. The first part is, you know, your average trend has 3 to 5 to 8 moves. Does that mean a trend cannot have 79 moves? Sure it can. It's just a statistical rarity or an anomaly. Can a burst of momentum have just one move and then fail? Sure, it happens all the time. So your sweet spot is actually, for an IFT perspective, between the second and eighth move. What does that mean, the sweet spot? It means that that's where your highest probability is if you're working the trend. If you're working little RBIs and VBSs all along here, gift plays as I'm circling, well, you have usually 3 to 5 to 8 moves in a trend that you could depend on. When I say depend, does that mean 100% certainty? No. In the world of trading, it probably means about 60-65% positive probability. Once you get beyond the eighth move, as long as the trend doesn't break, you can still depend on the trade, but your probability is about 50%. When you have your very first move, like what I'm circling right now might be becoming, that's only about 50%. So the sweet spot, your highest probability, never perfect probability, is the second through eighth move. Acceptable probability, as long as the pattern holds up and you do not have a market law 2 break, you have 50-50 probability coming out of your first move and 50-50 probability coming out of later moves beyond the 8th. So if you think about it, why does this only have 50% probability? Now we're getting down here and we're getting very close to confirmation, but if you really look at this, look where you are. You're kind of in no man's land. The 20 has flattened out. This has just as much equal probability of getting back above the 20 and continuing upwards, confirming the break and going lower, or just going sideways. You're kind of in a point of transition here. You're not kind of, you are in a point of transition there. So I hope this repetitive review of market law 4, the market law 2 breaks, I hope you're getting a lot out of it. So last week, and let's count back the days here. Here's today, it's Wednesday. Here's Tuesday. Here's Monday. Here's Friday. Here's Thursday. Here's where we were last Wednesday. What did I say then? I said, this looks like the first time in a long time we may have this opportunity that we actually have a pullback into the 20 moving average rather than just a break and a back above, a break and a back above, a break and a back above. And that's exactly what we did. We pulled back into the 20 and we triggered lower again. So taking this VSS-like trade, I am not calling it a VSS. I'm going to qualify the name. And if anybody remembers specifically the second word we add to VSS in a case like this, that we've gone over it multiple times here, but oh, I'm sorry, give me one moment. Okay, so I'm sorry for that brief pause. So now, if you think about it, this very much looks like the VSS, but there's one point missing. I'm just taking this from another angle. You have 4 points in order to form a VSS. I'm going to take this in reverse order, though, just to highlight this conversation again. So 1, 2, 3, 4. The fourth item, check. Do you have a, let me grab this eraser for a second, clean this up here a little bit. Do you have a subsequent bar that takes out a prior bar at or near a location? Yes. The subsequent bar takes out the prior bar right here. The location is at or near the moving averages. Point number 3, do you have a market law 3 pullback? Absolutely you did. Point 2, where are you in market law 4? This is potentially the first move. That's why it's not the definitive downtrend yet. Then point 1, do you have a downwards 20? Actually, no. It's not confirmed yet. It's starting to turn. It has flattened down and started to turn. But once again, you have to wait for your market law 2 confirmation. So unfortunately, nobody said the second magic word, what we call this, just to show that we know what we're doing and we have the potentially, Miguel, you're in the right neighborhood, right? We're saying the same thing. If this is going to turn from an uptrend to a downtrend, the 20 is going to have to halt the pullback and it has to progress and eventually take out the first lower low and go lower, and therefore what became the halt, or another word we catch, I'm sorry, I said the word. Another word we use is the catch, right? So the 20 halt, the catch, they're all synonyms at IFT. Your potential first move in a downtrend, think about those 3. Your potential first move in a trend, the halt, or the catch, they're all synonyms. There's nothing magically different about all of them because they're the same thing. So that's it. So if Miguel sees it as a catch, as a halt, I see it as a catch, somebody else sees it as a potential first move, we're all saying the same thing. So here was the trade idea from last week. I hope somebody besides me participated in it, because that's one of the reasons why we have the session, if it fits your trading plan. If it doesn't, don't do it. But the thought was, do the short, which again, because of the gap open, the entry would have been about there. And in my opinion, I'm using a red line to show a sell action for a short entry. Put the stop right above here. So right now in the general market, what is my worst case outcome from an IFT perspective? If I took this general market trade that I just described, the VSS catch play, the VSS halt play, the potential first move in a new downtrend, in a potential new downtrend, what would the worst case outcome be in this trade right now for an IFT trader? Let's see who really knows their rules of risk management. I'll give you a moment to answer. Come on, between Tao, Sonny, Miguel, Henry, Christopher, Betty, and Audrey, somebody must have it. Excellent, Sonny and Miguel. Right. The rules of risk management. There's 4 of them if you trade equities. There's 5 if you trade Forex. And I'm so proud of the 2 of you. Round of applause for Sonny and Miguel. Well deserved. Well deserved. Let's see. Once again, if all the talking in the background, the group of people in the background, if that gets disturbing, just let me know.
Hey,
So
good
this
job.
is for Sonny and Miguel.
Hey, good job.
So here's the rules of risk management. 4 for equities, and I'll add a 5th if you're trading Forex also. Number 1, never lose more than 1 risk unit in a trade. So if this came up and hit the green line, no, Garnett, you're probably somewhere in the middle of the session. And Garnett, I don't know, this is your type of trade, working the SPYs. Not sure if you took this trade idea from last week. So once again, the green represents a buy action for the buy stop. If it came up and hit the buy stop, your maximum loss would be 1 risk unit. Risk rule number 2, never add to a losing trade. If you follow the risk unit approach, you will never add to a losing trade. Rule number 3, once up 1R, don't lose money. So that's where Miguel and Sunny nailed it. I usually use yellow lines to represent positive risk units, not targets, represents positive risk units. This definitely has hit the +1R area. +2Rs would be down here, right as it starts threatening the first lower low. So I am in a position where I will not lose money. And what I actually did on this one, just because of the way it's forming, I just locked in break even. I didn't take any profit, anything like that. I just locked in break even. And if I get my little bit more of a push down into the former lower low, I will definitely lock in 1R and then see where it goes from there. So never lose more than 1 risk unit. Never add to a losing trade. Once up 1 risk unit, don't lose money. Once up 2 risk units, go home with money. Now, the 5th additional rule for Forex is always use a hard stop in Forex. You always place a hard stop if you're trading Forex. So we will revisit this. So in my records, and anybody else who participated from last week, again, we were right here on this bar right here last week. We talked about this idea of the possible pullback and the possible halt and the catch play and the possible first move in a potential downtrend. None of this is new. So if anybody else participated, all of us should really be in a position where we don't lose money now. So for our statistics, our batting average, it helps our batting average. Any trade break even or better is a winner, so it goes into the winning column for our batting average. As far as my reward versus risk ratio, the other mandatory statistic that you keep on your trading, it has a 0 impact, a neutral impact at the moment. Why? Because I'm in a break-even stance. It's not giving me a negative outcome, which would diminish my reward versus risk ratio, nor is it giving me a positive boost to my P&L, which would positively help my reward versus risk ratio. So it benefits my batting average right now, this trade, and it does nothing good or bad for my reward versus risk ratio. So I'm actually sprinkling in a lot of nuggets of knowledge. The ratios, market law 4, market law 2, the nature of trend, transition, working the potential move, the synonyms, first move in a trend, the catch, the halt, all the same thing. All right, let's take a look at the cues. I think we have exhausted this, and we'll come back to this next week. And who knows? Maybe by this time next week, we're back into all-time highs. Maybe by this time next week, we've broken the 200. We'll see where it goes. Also, there's one other possibility going into next week. We go nowhere. This 20 flattens out. Price action just keeps going sideways. There's only 3 things it can do. All right, let's take a look at those cues. Let's take a look at the cues. I'll grab the T triple Q. Oh my goodness. Like we said last week, essentially the same trade, right? It's not a VSS, it's a VSS catch play. So you could have played it on the Qs or the Qs or the S&P 500 as a general market trade. Let's take a closer look at this one for a moment on the Qs. In this case, the T triple Q. I would put the stop right over the setup. It did right here, though. We have a day before the gap down. Right here would be the entry. If somebody is still, absolutely, James, I usually do post the recording at the end, but thank you for the reminder. What should, and if an IFT trader took this trade, say, I'm not going to go over all the nuances. We spent a half hour on it already on the SPY. It's the same concept of VSS catch play, which is the potential first move in a new trend. What should if the trade took the trade like I just designated, the entry at the red line short, the stop at the green line for a buy action? What should this trader's worst case scenario be in this trade? Let's get a couple of votes in there. I'll give a hint. So far, nobody is exactly right. I'll give James, you're getting colder. Let's play the hot and cold game. Garnett is cold. Let's see. Garnett is cold. Sunny is warm. James got colder. Garnett got very cold. And James finally got it. Go home with money, right? I've repeated it 4 times already just today. The 4 rules of risk management. Rule number 1, never lose more than 1 risk unit. So if it came up and hit the green line, it would be a 1 risk unit loss max. Rule number 2, never add to a losing trade. Well, if you follow rule number 1, you're always following rule number 2. Rule number 3, once up 1R, don't lose money. So when it got down to about there 2 days ago, your job was to make sure you don't lose money. Once up 2 R's, go home with money. If somebody took this trade, the VSS catch play on the QQQ or the TQQQ, and they're still in it now, there's absolutely no reason for going home without money. Now, maybe like Sunny said, in order to do that, you lock in 1R. Sure, that's okay. But what if right now, this moment, I took off half the trade and I moved the back half to break even? That would obey all the rules. What if right now I took off a quarter of the trade and locked in 1R on the back 75% of the trade? That would follow the rules. What if I took off 3/4 of the trade right now and left the original stop on the last quarter? That would follow all those rules. I could stay here all day and create an infinite number of scenarios where this trade could be set up to make money. So definitively going home with 2 R's or 1 R? Sure, if that's what your trading plan says. The only thing the rule guides you for is make sure you go home with money. So I hope this helps. Once again, as far as the group participation in this room, round of applause for everybody. It is marvelous. I enjoy every group at IFT. Every group has its own nuances and personalities. But one thing I like particularly about this group and the Forex group, we are in relatively speaking, compared to things like the Crypto Club or the Equities Program, we are a much smaller, tight-knit community. So it's kind of fun. We get to delve deeper. There's a lot of mutual support. Almost 100% of people participate, and that deserves a round of applause. All right. Let's get to some other trade. I have like 4 or 5 other items carried over from last week. Last week was a very busy week. Mikhail, I think this one was yours. I think this next one was yours. Let's see how it worked out. If I could figure out the trade again and how it worked out. Let me clean up those colored lines. Oh, if I have it correctly, I just forget which one. Miguel, help me with this. If it's not your trade, remind me it's not your trade. You took a VBS. Was it here at area A or was it here at area B? I forget which one you took. And if I'm wrong and it's not your trade, let me know. Whoops, I'm sorry, everybody. I accidentally scrolled back. I might have missed some comments and questions. Give me a moment. James, would I set a hard stop loss at 1R? Going back to that, James, I think I ended up answering your question. I gave you about 5 or 6 ways out of an infinite number of ways that you could go home with money in that trade. Oh, James, this was yours? I had it down as Miguel last week. I don't have anything from you, James. Maybe I really messed up with the names. I apologize. Yeah, no, it was Miguel. It was Miguel. Okay. So it was Miguel, it was area B. So let's see. Miguel, can you tell us the initial stop again? I'm pretty sure it was right under the setup, but I don't remember exactly. So 2761 was the entry. Where was the stop? Okay, thank you, Miguel. So I'll use a green line for a long entry approximately there. Stop 57. That just doesn't seem right with this setup. But we'll go, 2657. All right, that's more like it. Right under the setup. Yes, yes, yes. So this is where it starts taking some personal finesse and judgment. Little bit off there. Let me try to fix that. I would say 1R area is right about there. In my opinion, that's pretty darn close to 1R. I would make sure I'm not losing money at that point. But if you're very particular and it just missed the 1R area by pennies or whatever, 50 cents or whatever it is, that's entirely up to you. Miguel has adjusted the stop, all right, to 2767. 2767, which means, Miguel, you're in break-even status, right? You'll be making a few pennies on the trade, which essentially is break-even status. Well done. There's a trade that goes into your winning column, and sure enough, that's exactly what happened and took effect, right? A few days later, boom, 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 done. No big deal. You got an opportunity to trade. You got an opportunity to exercise your skills. You got a trade that goes into your winning column and improves your batting average. And it made no money, so it neither helped nor harmed your reward versus risk ratio. All right. I have on my notes, Walter had the next one. Is Walter? Oh, Walter, you are here today. Let's see. Those who arrived later, I'm just catching up on trades from last week. We had if you arrived late, I'll put the recording in the room. We had a very comprehensive discussion about market law 4 and the transition and change of trends, and that your first move in a new trend and the catch or the halt are all the same thing. Then we spent a lot of time on the general markets on both the triple Qs and the SPY. Now we're starting to go through your trades from prior weeks. The first one was Mikkel's, and I think James said he was in on it too on PLTR. Now we're moving to Walters on DOCN. On DOCN. So here's DOCN on the daily. And let's see. This one I do have written down, and I could decipher it. 8190 by 7899. Working with those whole numbers. I like that, Walter. So let me get an idea again where it was. 8190. Okay, right in here. 8190 by, was that 78 or 7899? 7899. So not exactly, Walter, but here's kind of the spirit and the flavor of it. I'm just going to draw the lines quickly. They'll be close, but not exact. So once again, here you have your bull elephant ignition, taking out all the sideways momentum. Here's your confirmation move, right? First move up, new higher high, new higher low. That's taken out, so you definitely have an uptrend. And Walter worked this BBS up here. So that looks something like an entry about there and a stop, not really quite under the setup. It looked a little bit tighter than that. It looked like you were kind of using the entry bar as the area of your setup. Let's see, let me make sure I have it. Whoops. The entry was actually a little bit higher. Entry, here, let me clean those up. Kind of making a mess out of it all. So 78.99 for the stop would be more like here under this bar, roughly speaking. And the stop was a little bit higher, kind of in this region here. So once again, I think I quizzed you enough on this. Once up 1R, don't lose money. Once up 2Rs, go home with money. This is a trade that, once again, goes into the winning column. Goes in. Oh, good. I did have the entry and the stop right. Thank you, Walter. Goes into the winning column and was not mandated to make money. Now, could have Walter, went home with a half of a risk unit or something like that? Sure. The job, though, minimally is don't lose money. All right. So if you think about it, you're performing like the equities room during the opens when I do the open. So far, not a single losing trade. I have done the open with the equities room about 30 times in the last 3 years. I would say I do it only about 10 times a year as a backup to both Paul and Dan, and we have never had a losing day. Nothing special about me because I provide zero trades. It's all the traders' trades, like here. Right now, we have the general markets are winners and 2 break-evens in a row at the worst break-even. So now I'm moving on to Matt's trade. I don't see Matt here today, but here was Matt's trade. Matt actually had 2 trades that were carrying over from last week. One was Mara, which I had never heard of before. And let's see if I could discern this again. Oh, he was using the 50 MA, right? That's right. He's a fan of the 50 MA, and I don't draw those. I stick, for as far as my time with you, I stick strictly with the IFT way, but it's really not hard to imagine it. If this is the 20 and this is the 200, you could envision the 50 being somewhere in here, and this was his VBS here. This was his VBS here. So again, a green line for the entry, red line for the stop, yellow line representing risk units. Once up one risk unit, don't lose money. Once up two risk units, go home with money. For me, even if it wasn't exactly two risk units, if I was near two risk units and back into that 20, you better believe I'd be going home with money. So once again, like the general market and the QQQs, the 20 did end up halting or catching and starting the downward movement. So even if your trades are not exactly IFT style, like Matt used the 50 moving average to trigger off of, I have no problem with that. We'll talk about it, but I'll always bring it back to IFT terms and IFT sensibility. So Matt also had a trade on the energy ETF, the XLE. The XLE. Again, on the daily, now let me take the 6 things. That's right. We were talking about possibly working off of the consolidation. Give me a moment. I have a couple of notes here on this. This is one. Now, we don't talk about this in the equities program and the swing program. There's actually 3 pages out of the 300-page manuals for those programs that touch upon this. It's called a channel trade, when you have something sideways in motion. So what Matt did on this, he noticed every time we came to the bottom of the channel and into the rising 200, we popped upwards again. Every time we came to the bottom of the channel into the upwards 200, we popped up again. Every time we came into the channel, we popped up into the upwards 200, we popped up again. Every time we came into the channel, so can you see the pattern, the redundancy here? So Matt played off of this down here. And if I remember correctly, I think he said, if we poke back above the 200, I'm going to enter here and put my stop under the 200. Well, this turned out to be a really nice trade. Once up 1 R, and then it just kept going. 2 Rs, 3 Rs. I don't know what to do with this without Matt here. I know it's definitely going to make money. So here's what we'll do as a group. We'll lock in 3 Rs no matter what here. And let's see where this goes into next week. So I'll make a note on this. 3 Rs and see where it goes into next week. So think about this. Trades in the room. SPY, worst case break even. Trade is still in motion. QQQ, worst case scenario, make money. The trade is still in motion. Miguel, break even. Walter, break even. Matt, the first trade, made money. Matt, the second trade, is making money. This room, like the equities room, is definitely not a loser. It's a winner if you practice predominantly the right risk management. And then I had 2 more notes here. Oh, really, one more note. One more note. For some reason, I made a note that we talked about JETS, the ETF that tracks, I call it the airline industry, but it's not just like United and Delta and American that actually fly. It also includes the jet manufacturers like Boeing and companies like that. So let's find JETS. Why did that catch my eye last week? Maybe it had to do with the Delta virus and just keeping track and seeing how travel-related industry is doing. Oh, no. Same reason. That's right. Now it came back to me. It's the sideways momentum. And are we going to get a pop and get back above that 200? So on this one, I would not do the sideways trade like Matt did on the XLE. Why? Because the 200 is too close. But I was interested, basically, here's what I mentioned with JETS. Can we get back above the 200 and potentially start a new uptrend? Or eventually, do we take out these former lows and form a downtrend? Right now, upward bounded by the 200, downward bounded by the equal lows. So that was the discussion on JETS. So nothing but winning trades in this room when you think about it. Every trade idea, whether it was in finality or still in motion, and every actual trade shared in the room from last week was break even or better. Why? Because whether you're doing it privately or not, for the spirit of this room, I enforce the rules of risk management. Number one, never lose more than one risk unit. Number two, never add to a losing trade. Number three, once up 1 R, don't lose money. Number four, once up 2 Rs, go home with money. Fifth rule of risk management, if you are trading Forex, always use a hard stop in Forex. So anything else at all, even if it's a symbol that you'd like me to go look at, I'll take time and look at, let's say, 3 symbols. I'll do top down on 3 symbols, but I need 3 things from you minimally. Usually I ask for 6. But I want to know the symbol, the time frame that you're most focused on, and bullish or bearish. So I'll give you a couple of moments. Any other questions or comments, any other actual trades, or even if you want to go glance at a couple of symbols, I'll take up to 3 symbols. I'll give you a minute. Okay, I don't know what a lateral breakthrough is, Miguel. Maybe it'll come clear to me when we get to the chart, but thank you for the trade. That's actually a trade if you gave an entry and a stop. So let's take a look. AMD. AMD is a favorite of mine for I've never seen it in the manual. If you could do me a favor, give me. You don't have to do it right now. You know, next week or a week after, or a month from now. Give me the page number. I'll take a look at it. Maybe there is something, you know, some language that I'm not familiar with in the manual. It's possible. I have a feeling it's talking about the channel, right? Lateral, channel, sideways. Again, all synonyms, but you don't have to do it now, but if you can find out exactly where that phrase is, I'll go study up myself. I have a feeling, once again, it's the channel or the sideways. So let's take a look at this. AMD on the daily, one of my favorite tech stocks to swing trade. That's just my personal bias. And entry at 107.70. So let me draw a red line. 107.70. I'm sorry, 170. So right about now. Right about now. And the stop at 107. So I'll draw a green line for a buy stop. So right over this. So here's what it sounds like. Thanks, Miguel. I'll definitely take a look at it. Here's what it sounds like you're trying to do. It is the channel thing that I was talking about in the sideways thing. So lateral is another synonym. So it sounds like exactly the same thing, right? This is formed the channel. I'll use white lines. Equal highs, equal lows, And Miguel is working that the sideways momentum gets broken, right? One bar closes below this area, one bar goes further. It's not quite there though yet, Miguel. Not quite there. But once again, if it it would be obvious to Miguel if price action started coming upwards towards the top of the channel that the trade's not working. That's the trade's not working. Now a clearing elephant is something different, and there's no elephants. The last elephant move on this chart is right back here. There's no elephants. All these bars are about the same size. Nothing's clearing yet. So I agree with you with the word lateral being a synonym to sideways or channel. The same way halt and catch and first move are synonyms. But once again, could maybe you see this as an elephant? I don't know. It's kind of tough. I don't see it really as 2 or 3 times the size of what preceded it. Okay, if you see it as an elephant, but it's not clearing. It's not clearing anything. Okay? So once again, there is personal interpretation here. So even though I don't see this as an elephant, I see it really, what, 1.5 times bigger than this, maybe 2 times bigger than this, but Miguel sees it as an elephant. That's fine. But an elephant clearing, no. For this to truly be an elephant clearing bar, you would have to clear. That bar would have to come down like this, truly clearing out all that sideways momentum. But once again, if today or tomorrow it does follow through, you have a nice trade on your hands. So again, I'm going to take that term lateral. I'll write LAT, equivalent to sideways, equivalent to channel, all different synonyms that we use for the same thing, right? Dead sideways, look at that 20. All the pattern is doing gets to the bottom of the channel, goes up, gets back to the bottom, goes back to the top, gets back to the bottom. Now, if you truly break below this area here, which it is really pressing to do, sure. Now, here's my next question for the room. What on this chart should be a pretty big focus for Miguel? What on this chart should be a pretty big focus for Miguel in regard to Miguel's trade? Let me clean up all my drawing and writing here and actually put the stop in the entry again. Entry approximately there. Stop approximately here. What should be a pretty big thing that Miguel has focus on in regard to this trade? Excellent, Garnett. I thought I was going to be disappointed for a moment. That's funny, Garnett. No, as long as you participate, you don't let me down. It's when there's crickets in the room, right? So if you're really focused, once up 1 R, don't lose money. Once up 2 Rs, go home with money. This location of the 200, as Garnett said, becomes pretty significant to the trade. So, well done, Miguel. Give me a moment. I'm going to go silent because I'm going to make some notes of this so we could follow up next week. Now, some of you might be thinking, sure, Garnett, I'll post last week too. I usually do post the current one and the week before. Much further back, they do get erased and recycled and all that. Very far back, I usually can't. So now, some of you may think, and this thought actually struck me, and then I remembered, oh, this is AMD. If you think about it, Miguel's entry is about $100. The stop is about $107. For a lot of it, that a $7 stop, that's a pretty wide stop. But I'm telling you, this AMD, it could run $7 in a heartbeat. It could run $7 in a heartbeat. I feel like it was only like 4 months ago I was trading it regularly in the $70 range. Then there was a while I was trading it in the $80 range. Then in the $90 range. I mean, this thing moves $10 ranges. Well, let's even take a look at this. This is the 80s up to the 120s. One fell swoop, wham, over the course of 2 weeks. All right. Well, that seems like everything. This was a good session. We've been going over an hour. We covered the general markets. We covered a whole bunch of trades and trade ideas that were presented in the room. And we have Miguel's trade going into next week. So I see no more trades, no more questions, no more comments, except for the request for recordings. I'm going to call it a wrap. Normal routine. Give me about 2 minutes. I'll have this week's, I'll have today's and last week's sessions in the room. And I'll leave the room open for about an additional 5 minutes so you can grab them if you need them. So Walter, Tao, Miguel, James, Henry, Garnett, Christopher, Betty, and Audrey, thanks for being here and your participation. I hope you get a lot out of this. If you want to say, facilitation and moderation here has definitely helped my swing trading. From trade ideas to iteration of how to do things right, it's always helpful. All right, everybody. I will see you in various programs. Most of you belong to other programs, whether it's Oliver's Black program or Oliver's Mentorship or Oliver's Trade the Open Like a Boss, or with Dan and Paul in the equities room, or some of you are Forex traders. Although some of you I haven't seen in the Forex room lately. Again, it's there for your pleasure. All right, everybody. I'll see you real soon. If you need the recordings, it'll be there too.